The upcoming 5 stocks will have the potential to give you an explosive return just like the stock Tesla. And the first stock is named CoreWeave. Analysts are projecting that the revenue expansion for CoreWeave will go from 3.5 billion currently to 12 billion next year, which is at least a 3x. The even more positive point is that the company already secured 26 billion in revenue for the coming years, including an 11 billion contract with OpenAI. All this is providing a strong visibility into future earnings, and this is all thanks to the multi-trillion-dollar AI infrastructure market that CoreWeave operates in. But which investment did they make that allows them to grow with these growth rates? Well, that's the one negative point some investors don't like, and that is because they acquired massive debt to make sure that they are able to build these massive AI data centers. The positive thing is that the stock price did fall almost 50% since June, going from 180 to 100 right now. Analyst price targets are also spread out because of insecurities. It's now trading extremely cheap at only a price to sales ratio of 12, but that's mainly because of the massive debt. The thing that's giving me confidence in this company is that a ton of their revenue is already visible and secured, and that's reaching up to 30 billion. Stock number 2 is called Uranium Energy Corp, which is selling uranium energy, so basically nuclear energy, to the biggest household names like Google, Meta, Amazon, and all these companies that need to build these massive data centers that need a massive amount of energy. And this company is setting itself up in the midst of this to capitalize on all this growing demand, because they were already sitting on a ton of uranium energy, but they were doing nothing with it. But now that Trump has given the green light on nuclear energy, that will allow all these massive companies to get their uranium energy from this company. And you can see that in their revenue growth rates, because last year their revenue grew 1000% plus. And the great thing is that demand for uranium is expected to outpace supply significantly over the next decade, with projected shortages potentially reaching 70 million pounds by 2035. And this supply-demand imbalance is creating a strong upward pressure of uranium prices. The other positive point is that this company has no debt and $270 million in cash. And like I already told you, they have substantial physical uranium stored, which is valued around 100 million. Furthermore, this company is projected to grow their revenues more than 140%, and this is likely to continue the upcoming multiple years. Their price to sales ratio right now is 70, which sounds like a lot, but their 1 year forward price to sales ratio is sitting at 12 and will become extremely attractive again. So don't let the valuation scare you. The third stock is called Harrow. Harrow is expected to accelerate their growth and improve profitability in the upcoming years. They are particularly focused on innovative and generic eye care treatments. They recently demonstrated a 30% revenue growth rate driven by increased product adaptation, and this company will benefit from the high demand of aging population. Analysts have a bullish outlook of around $60, which is a 60% increase from current levels, and they are also expecting that their revenue will grow from 300 million in 2025 to 600 million in 2028. That means that their revenue will double in 3 years, and it's only trading with a price to sales ratio of 6.6, which is absolutely nothing compared to their expected growth. The next stock I had to split in two, because you have to spread your exposure in both of these stocks, because they're both under $3 and have extreme growth rates, and Wall Street is still too scared to invest in these stocks. And these two are gold mine companies, which is a great play if you want to expose yourself to gold. Investing in gold alone is pretty boring, and you will never hear people say that they got rich because they invested in gold. And the first gold mine company is called Galiano Gold, which is a Canadian company located in Ghana, and they have 4 main open pit mine areas, which are located on the Ashwagandha gold belt, and that's the underexplored portion of central Ghana. But you're obviously curious how much they will be growing their revenue and what their valuation is. They are trading at the price to sales ratio of 1.8, which is basically nothing. They're projecting to grow their EPS 40%, which is decent, but their revenues 60%, which is pretty massive. But then there's the question, are they even profitable? Recently, they had their first profitable quarter with a net income of 20 million, and there are 5 analysts that are covering the stock, which is not bad for a small company, with an average price target of 40% upside, but in a bullish scenario, it could double your money within a year. And the other one is called B2Gold Corp. They are trading at a price to sales ratio of 2.5, which is a little bit more expensive. They are now 3 quarters profitable. The only thing is that analysts aren't that bullish on the stock, even though they're expecting to grow the EPS 800% and their revenue 100%. So I don't really understand why analysts aren't that bullish on this stock, because the price to sales ratio of 2.75 isn't really that expensive. And remember, they are already profitable. So just in case, expose yourself to both of these stocks, and then you might double your money sooner than later. For the 5th stock, I got disappointing news, because I talked about this stock in my previous video, and unfortunately I don't have time to go over this stock again, but it's called Mara Holdings, and not only me, but a ton of analysts, Wall Streeters, and retailers are really bullish on this stock. So if you want to know more about the company, watch this video, and if you watched until this point, please just smash that like button for me, and subscribe to find out the best stocks to buy in the future.